Welcome to Finance with EJ, where your financial dreams come to life. Get ready to supercharge your savings, crush debt, and make money moves that will leave you feeling unstoppable. Subscribe now and join the journey to financial freedom and generational growth building.
Ever wonder how Apple Inc. became the world's largest company in terms of market capitalization? In the race of global corporations, Apple is like the seasoned marathon runner who's been leading the pack for years. Its journey to the top is a testament to its relentless innovation, strategic market moves, and trailblazing products that have captured our imaginations. From the game-changing Macintosh computers that revolutionized the personal computing landscape, to the iconic iPods that changed the way we listen to music, and the revolutionary iPhones that have become a staple of modern life, Apple has consistently set the pace in the technology race. It's not just about creating products, it's about creating experiences. And Apple has mastered the art of delivering unforgettable ones. But even the fastest runner can stumble, right? What happens when Apple faces legal hurdles? Imagine if you're the only kid in town with a candy store. Sweet, right? But what if the other kids claim it's not fair, and the town council agrees? Let's dive into that analogy. You see, Apple, like our kid with the candy store, is in a similar situation. They've got a fantastic product that everyone wants. They're slick, shiny devices. But sometimes they're the only game in town, and that can ruffle some feathers. This is where the big words come in: antitrust laws and monopoly accusations. Antitrust laws are like the town council's rules. They're there to make sure everyone plays fair and no one hogs all the candy. A monopoly, on the other hand, is when one kid, or in this case one company, controls the whole market. So when Apple is accused of having a monopoly, it's like saying they're the only kid with a candy store and they're not sharing. These accusations can have some serious consequences. If Apple is found guilty, they could face hefty fines or even be forced to change how they do business. And that's where the financial implications come in. When investors hear about these legal issues, they get nervous. They start wondering if Apple's candy store might get shut down or if they'll have to pay a big fine. And when investors get nervous, they sell their shares, causing the stock price to plummet. Remember, the stock price is like a scorecard for a company. When it's high, it means people believe in the company and its future. But when it's low, it shows that people are worried. And just like our kid with the candy store, Apple doesn't want people to worry. They want people to believe in them and their products. So, they need to navigate these legal waters carefully. They need to convince everyone that they're playing fair and sharing the candy. And if they do that, they can keep their candy store open and keep making those shiny devices we all love. So, the candy store owner has to play fair, or he might lose his store. Similarly, Apple needs to navigate these legal waters carefully. Despite these challenges, Apple still holds the title of the world's largest company by market cap. But what does that even mean? Well, think of market cap like the price tag on a house. It's the total value of all the shares of a company, just like the price tag on a house is the total value of that property. So, why is Apple's market cap so high? It's because investors believe in the value of the company. They're confident that Apple will continue to grow and make money, just like someone might buy a house, because they believe it will increase in value over time. And just like a house in a desirable neighborhood, Apple's high market cap shows that it's a company people want to invest in. It's like the most expensive house on the block, and yet, people are still lining up to buy it. So, Apple is like the most expensive house on the block, and people are still willing to buy it. So, we've seen Apple's rise, its legal challenges, and its market dominance. But what does this all mean for us, the consumers? Let's imagine walking into a mall. Now, envision that mall with just one store. That's essentially what a monopoly is. Apple's extensive market control can be compared to this shopping scenario. On one hand, having one store could mean uniformity and consistency. You know what to expect, and you trust the quality because it's a brand you've come to know and love. However, on the other side of the coin, this lack of competition could lead to complacency. With no other stores to push them to innovate or lower prices, the one store might become stagnant and expensive. That's the double-edged sword of Apple's market dominance. It's a delicate balance, and it's up to us as consumers to keep questioning, keep pushing, and keep demanding better. In the end, it's not just about the size of the apple, but the whole orchard that matters.